So, I mean, there's, I think, 16,000 other things on that we could go through on here to talk about from a chart aggregation perspective, but I don't think we have that much time on the pod.
No, that was cool. So call it top five charts of the year plus two. So the Magnificent Seven charts
There we go.
of the year.
Dorsey's Max 7.
Yeah, Dorsey's Mag 7.
Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the last podcast of the year.
Nice.
Week ending on December 29th. My name's Ian. Will, good to be sitting back across from you here.
Yeah, it is. Yeah, last podcast of the year. I didn't think about that until you just said it.
That's hard to believe. Yeah,
It really is. Yeah.
it really is. Yeah, it's
Heck of a year.
it has been quite the year.
I mean, geez.
I think coming in to this year, not many people would have guessed the kind of year that we would have seen. I mean, we were talking earlier today, like the Nasdaq 100 is, if it ended now, QQQ would
Yeah.
be the best performing year for QQQ ever.
Yeah, that was surprising to me because, so QQQ being a traded product. So the
Right,
ETF
right.
itself,
Not the
since-
index.
not the index, since 1999, this would be its best year.
Right.
Not by a ton, but I think it would be the best year, and then second would be
I
2009.
think 2009 was the best, and then up until this year, not
Up
including
until
this
this
year.
year.
2009 would have been the best. 2003, I think, was one of the better ones
Yeah.
after that.
I'll have to go look at it again. I'll have
Yeah,
it pulled
but
up right
you're
now.
looking at some pretty historic years to start off, and the fact that we're right up this, I don't think many people would guess that.
No, and it's weird because with hindsight, you look at last year, the QQQ was down over 30%.
Yeah.
Everything was down double digits for the most part. So you would think you would have some type of snapback in a year like this, or some type of, call it, mean reversion.
Right.
But I don't think anyone would have thought it was going to be to this magnitude
No.
of a recovery.
It's always when you least expect it, right?
Yeah, like that's the thing with markets. Like the biggest moves are always on surprises that haven't been priced in or no one's really thinking about
Right.
being a real possibility.
Right. Yeah. So we're not getting into predictions today. We just follow numbers, follow
Close all my tabs then.
follow the X's and O's. But we're sitting here, we were waiting a while to kind of talk about what we were going to talk about. And I was secretly just waiting to see if how close the S&P would get to a new all-time closing high before we started recording. We're $5 away from an
$5.
all-time closing high right now. I think we need to get around the 47.96 point. If we got there Thursday, so we're recording this Thursday afternoon, it's around 1:40 p.m. Eastern time. We started recording, we took down 1 point. So let's hopefully start going back in the other direction and close today.
Yeah.
But
You know,
yes,
I was gonna say just really quick. So like we're talking on our morning research call
Yeah.
about the S&P kind of like floating up to all-time highs to
definitely, yeah.
just floating up to all-time highs to in the year participation indicator like super lofty. I'll be curious how the first week of the new year goes. Like I wonder if people are just waiting to trim positions for tax reasons.
Right.
I don't know. That was just something I was going to mention. That just jogged my memory when you're talking about SP just floating and trickling up to all-time highs.
I mean, it wouldn't be that surprising, honestly, just given how overbought everything is.
Yeah.
I mean, we'll get into some of that stuff, and we talked about a lot of that over the last couple podcasts. And I mean, it's hard to find a feature in the report over the last month that we haven't mentioned something's
I know.
overbought. I mean, it's everything you look at these days is overbought,
Yeah.
but it's being bought on pullbacks.
Yeah.
So I guess we'll see what happens.
I cut you off though. So you're gonna say something about
No, but I
the
think that
S&P
brings up a good point. So I think for today's podcast, last podcast of 2023, we want to take a look at some charts. I mean, seen a lot of stuff online about top charts of the year, top whatever most important people recapping the year in charts. And since what we do is point and figure charts, we felt that would be a kind of a prudent way to see not necessarily what we thought was important, but what you all, the subscribers to our research platform, thought was important. So what we were able to do is aggregate all the click data of people going to charts on our platform and seeing what did people click on the most.
Mhm.
There was some surprising stuff in the list that we'll kind of dive through. The one thing that was definitely not surprising was the most clicked on chart, which was, of course, the S&P 500.
Yeah.
Right. I mean, we saw by a wide margin, the S&P was the most clicked on thing on the platform. Just to give some perspective, over 77,000 clicks to the S&P 500 SPX default chart there, just from the end of March, or so just from March forward. So we didn't start tracking some of this stuff until March forward. So just for, I mean, take out the first 2 months of the year, you're still getting over 10,000 more clicks on the S&P than anything else.
It's crazy.
Yeah, it's quite a lot. And for good reason. I mean, we see the S&P up, a broad market benchmark, what everyone kind of wants to go to. It's also up almost 25% year to date, which is pretty shocking. And we talked a lot over the past couple of weeks about the historic nature of that column of X's that we saw for the S&P. One thing I think is kind of interesting is we saw every major domestic equity chart that we were looking at in the top 30, everything peaked in clicks around late October.
Oh, yeah.
Before the rally picked up. I mean, if things are hitting the fan and people want to come in and check out how bad things are, it seems like a lot more people coming in and checking things out. And then once stuff starts rallying, people just kind of seem to not come in and check it as often.
No need to check as often.
Right.
That's fascinating.
Yeah.
That makes sense. I was looking at, because you mentioned S&P is up 25% this year. For perspective, 2021, it was up 27, which I forgot. And then 2019, it was up 29. So I was going to try to find wow, this is the best year since whatever, but
Best year since 2019?
Since 2019, which really isn't that special. Actually, no, sorry, since 2021.
Oh, okay.
It was up 27 in 2021.
Yeah.
So a great year nonetheless, but not as historic as something like the Qs so far for the S&P at least.
Yeah, I mean, still 25% is not too shabby.
That was incredible.
And you're seeing, so we saw 32 X's on that last X column for the S&P 500. I think there's only been one other time. I have to go back and check the data that we went through before. There were only two other times that we saw more 30 or more.
Yeah.
I think one was 31. I think we might have gotten, there's one
That
or
was
two.
08, right? Was it
Yeah,
08?
one or two. And then you got to go back to like, I think it was the 70s or the 60s looking. I mean, you got to go back a ways to find this many X's on a default chart, default chart for the
single
S&P.
column.
Single column.
Yeah.
We got to pull back. And I was like, oh, the pullback's here. It's coming, right? Pull back down to 4,700, snap back higher, and we're 5 points away from an all-time high now.
Yeah, I would have expected a bit more from that pullback,
Right.
to be honest. And maybe we do get a little bit more like beginning of the year. There's some qualitative reasons to think so. But yeah, I was with you on that pullback. I would have expected to be a little bit deeper after 30 X's in a single column. I know it's been given to me the analogy of a sprinter or a swimmer or something like that. You take a big inhale, you typically have an equally large exhale, and that was a massive inhale and just a small breath, a blip of an exhale. Yeah.
Yeah. I mean, we dusted up some support though. So, I mean, it's a good thing you got some support at 4,700. That's still going to be in overbought territory. But I mean, I think Chuck brought up a good point. I think I mentioned this on the podcast last week, but I'll mention again. He was that things can pull back in price or pull back in time.
Yeah.
Right. And so the longer the S&P stays at elevated territory, that trading band will normalize. Overbought will become less overbought unless it just keeps on rallying higher. But these steadier moves that we've seen have not lended itself to the extreme overbought readings that you might expect. Right. Nonetheless, we're still north of 100% overbought. So wouldn't be surprised to see. But from a charting perspective, since we're here talking about the top charts, right? You got support at 4,700, pretty distant support. Have no really semblance of any support looking for it after that. Just a box away from a new all-time high. So I mean, would like to see some other kind of support built into the picture there, but at least you got some support built in there at 4,700.
Yeah, that's a great comment about pullback in price or a pullback due to the passage of time. Essentially, that's a great takeaway for sure. Yet nothing further for me to add really on the S&P 500 chart. I always love the 50-point, but even there we have gotten nowhere close to a pullback.
All right, so the next chart to hit on. I know we talked about it before, but to be honest, I thought that this next chart was going to be the top chart of the year.
Oh yeah, more than the S&P.
I had a feeling that that's what it was. It was not necessarily close, but it was certainly up there. It was NVDA, of course, right? NVDA. We saw, just for reference, S&P was at 77,700 clicks. NVIDIA at 67,000 clicks. Next closest one at 57,000. So there's a massive gap between NVIDIA and everything else, every other stock, right? And so, NVIDIA was the stock of the year, right? It's one everyone was talking about. It's up 238% year to date. To be honest, though, not a bad looking technical picture.
I was about to bring that up.
It's up 238% year to date, and it is less than 40% overbought.
It's more actionable than the market right now,
Oh, 100%.
based off that weekly
Yeah,
distribution range.
absolutely.
I bet it's more actionable than 70% of the stocks.
It's more actionable than most other names in the semiconductors index. So I was looking at that stuff for the technology rundown update stuff that we did yesterday.
I'm familiar.
Yep, the semiconductors space as a whole is in pretty extended territory. You look at something like XSD, you look at SOXX, any of those broad representatives, you're seeing a lot of the smaller names kind of follow through to the upside. But they've been led by NVIDIA, and NVIDIA's just kind of been showing some consolidation around the upper 400s point over the course of the last several months. I mean, you're looking at a more than 100-point trading range, but it's still pretty. You got some support baked in there at what 456 on the default chart, additional support around that 400, 396 point, moving lower from there. But not a bad looking technical picture.
Yeah, I mean that has definitely been a normalization due to the passage of time. Because gone up $500 stock, 20 points really isn't that much. So yeah, that's a great looking name. I think that's a great call. I was looking, it's up 238% so far this year.
Yeah.
That is by far its best return for the past 15 years. The closest it's gotten before was 2016. It was up 223% in 2016. Yeah, listen to these years though. So 2023, NVIDIA is up 238. 2022, it was down 50 for the record. And then 2021 up 125, 2020 up 120, 2019 up 76%. I mean, that's just parabolic, as it seems.
But it's these extreme returns aren't unique, right? I mean, I think that's another it's wild moves. I mean, you're looking at a our risk scored 3.24, so you're more than three times the volatiles market, right?
Yeah.
But which is high, not the highest we've seen by any means, but high. But I mean, it's these extreme returns are not new to the price, right? I mean, what did it perform last year?
Last year, NVIDIA was down 50.
Yeah. So and then I mean, it's not absurd. If you go down 50%, you got to go up 100% to get back to where you were.
Yeah.
And it's again more than doubled since doing that. But yeah, the chart itself doesn't look as you might think just by hearing all the talk about it.
Yeah.
All right. So next on the list, obviously next on the list when we're looking at the straight up top charts.
Yep.
You have your Mag 7.
Yeah.
Right. So you have NVIDIA being one of those. You have Apple. You have Microsoft, Tesla, Amazon, Meta, and Google are the top 7 most clicked charts on the platform.
Yeah.
Most clicked stocks on the platform, rather.
Okay.
Not surprising, right? I mean, that's what everyone's been talking about so far this year. Magnificent 7 this, Magnificent 7 that.
Yeah.
They're the 7 most clicked stocks on the platform. QQQ is the most clicked ETF on the platform, including all of those Mag 7 names in it, right? So it's been clicked on more than any other ETF. By a noticeable margin, SPY was next. RSP was pretty close behind it though.
Yeah.
Which I think is kind of interesting and maybe could be something to kind of consider as we look toward next year, that we're seeing a lot more clicks on RSP toward the latter half of the year.
Yeah.
Versus the other kind of cap weighted. But when you're talking about cap weighted, it's hard to talk about cap weighted and not look at Qs.
Yeah.
Qs we've seen did reach new all-time high up on that chart at 410. Strong 5.75 fund score, and gonna sound like a broken record. It is in
You're gonna say it's overbought
territory. 97% overbought, which is high, not as high as the S&P, but pretty high.
Yeah, and honestly, apart from that, there really isn't a ton negative to say here about the Qs. You mentioned the fund score at 5.75. Buy signal broke out to new all-time highs. Apart from it being pretty overbought and really no nearby support, this is a really strong looking chart right here. It makes sense that call it sentiment followed price or kind of clicks followed price here as you continue to see one of its best years ever.
Yeah, that's a good point. Clicks following price, and that's certainly what we saw throughout a lot of these names. So I mean,
going the other way too. I think that's been fascinating to me. So like clicks followed NVIDIA, S&P, the Qs going up towards all-time highs. It also followed some down, and I know you have a list on there of some of those as well.
Yeah, I think that's a good. So, well, when you think about it from just the click data, so these were like Qs was the top most clicked ETF, up higher than most other ETFs, but it was most clicked on when it was down the most.
Yeah,
It was most clicked on when the last week of October
Mm,
when it was down 10%,
mhm.
right? From those July peak. So I mean, I think that's another pretty interesting point. Yeah, it was clicked on a lot, but it was clicked on a lot when things were looking like they might not be as great. And then people kind of tailed off.
Yeah, TNX was high on the list, right?
It was. TNX was
U.S. Treasury 10-year yield
it,
for yeah.
right. So TNX was actually the most one of the most clicked on indices. So it was the S&P was the most clicked on
Yep.
index. TNX was second.
Nice.
So that was a pretty surprising thing in general. It was the 14th most clicked on thing on the platform. The TNX picture, I think, is quite the opposite. It's a consistent picture, but been consistently lower the past couple months.
Yeah. Yeah, because this was on just an absolute journey from really May of this year. It rose directly almost to that 5% level.
Yep.
And then has since fallen off a cliff
Right.
in the past 2 months of the year. I think that's, of course, been a nice little tailwind for equities, gold, even some other areas of the market.
Yeah, directly inverse to the market improvement. It's
Yeah.
deterioration lower.
Right? Yeah. Yeah. It's interesting though, because if you look at TNX from January to May, it had a couple spikes. For the most part, really didn't go anywhere. It was around that 3.5 to 3.75%. And then you had that, as we mentioned, that ascent to 5%. And then that elevator moved down. Like everywhere else is historically overbought, TNX is historically oversold right now. It's at the bottom of its 10-week trading band. We had been expecting support or a bid or normalization to step in here, just like we had for equities, but we haven't really seen this show any signs of turning around yet.
Yeah. I mean, I think that's one of the big points that we'll kind of look toward into next year because it is 108% oversold through market movement Wednesday.
That's extreme.
That's pretty low historically, right?
Yeah. Oh yeah. I don't have the date on the last time it was that oversold, but I'm sure there's only a handful of times.
Yeah. And so in looking at other indices, so we have TNX moving lower. I think another kind of interesting deal that we've seen similar movement of the same time frame, not to the magnitude, but the dollar's been tailing off pretty heavily, right? And you've seen that time frame match up pretty much exactly with the decline in TNX. The dollar was not, it wasn't the top 50 most clicked things, but it wasn't clicked on maybe as much as I would have thought.
You said it was in the top 50?
Barely. It was
Okay.
45th.
Wow. Okay.
Just it's smacking between Uber and Pepsi in terms of on the platform. But it was clicked on a fair amount, DX/Y, right? But you saw that break into a negative trend over the past couple of weeks. I think if I had to choose one of the charts for the year, given maybe that I follow international equities a little bit more, I would probably choose that. Put that in my list, but it wasn't clicked on as much as others.
I would agree. If I were to pick a top 5 most influential charts that really told the story of 2023, I would have put the US dollar in there as well. You cover international, I cover commodities. So I think both implications for the dollar are both pretty close to home for both of us. A weakening dollar typically good for both commodities and international equities. But in terms of what the people wanted, it was really not the US dollar.
Well, it wasn't, but gold, you brought up a good point, was pretty close. So TNX was 14th, gold was 15th. GLD was 15th on the list. So GLD was pretty up there, and we've seen it get pretty up there in price recently too, right? I mean, we're at just a couple boxes from highs there for GLD. Actually, what a spread, triple top matching highs from 2022. Only been higher in 2020.
I know it's so crazy to me. Gold's hanging out at its all-time highs. I guess not crazy. The pullback in rates has lowered the opportunity cost to hold gold, but that's a pretty remarkable chart that it's been banging up against those all-time highs so many different times. I mean, March 22, April 23, May 23, twice in December of 23, you've ran up into this resistance point.
It's a pretty steady looking chart.
It is a pretty steady looking chart. 194, not overbought. 194 would be notable. I think 196 would be the most notable for gold. To me, it still looks tough that we're going to get there, but strong fund score. I mean, weight of the evidence is pretty positive for gold, despite that big resistance nearby.
Maybe that could be something. I mean, something we'll certainly be keeping an eye on as we move into 2024. But then in terms of the final kind of the aspects of the charts aggregation that we wanted to touch on. So we also look at indicator data. So what indicators were people clicking on the most? And I think this was perhaps the least surprising to me.
Yeah,
Was the most clicked on indicator from a technical indicator, participation-based indicator standpoint. So this does not count people going and clicking on the dolly page.
Right.
This is just point and figure charts.
Yeah.
And the most clicked on point and figure chart indicator was the bullish percent for the New York Stock Exchange, BP NYSE, which we had a tweet out about it today is getting kind of out there as well.
Yeah, so bullish percent for the NYSE, how many stocks are on point for your buy signal? Pretty classic Dorsey Wright indicator. That printed 64% as of yesterday. So as of Wednesday, we had 64% of stocks on a point for your buy signal. That matches the highest level that we've seen this entire year, which was back in February of 23, where we saw 64% of stocks on a buy signal. Before February 23, the last time we had this many stocks on a buy signal was November of 21, which makes sense. 2022 was pretty atrocious.
Yeah.
So it makes sense. You have to go back to the end of 21 to see this type of participation before. And if you look back before that, it is very common to see this indicator sit at 64% or higher on its chart, especially above 50%, spends a lot of its time there. So I think the recent move is certainly notable, and I think small caps have helped that a lot.
Yeah, absolutely. I mean, you're looking at major small cap indices kind of just roaring higher.
Oh yeah,
over the past few weeks, and that's a good chunk of the BP and NYSE. But we're also seeing, I mean, some of the other bullish percent indicators are high, but you're seeing the small cap improvement really showing through a lot more. It's not small cap improvement is obviously not going to show through on like BP SPX,
right.
But when you're seeing it on BP and NYSE, you've seen more of a sharp move up recently, and that's why.
Yeah, to that point, actually, I saw a tweet from, if you spoke earlier, you may have seen this. I believe the Russell 2000 is having its third best 2-month performance stretch ever in history.
Wow.
Yeah, so 2 months of rolling performance for RUT, where it's like November, December. If it were to end yesterday, it would have been its third best ever.
And so just for perspective too, when you're looking at the BP SPX, like we mentioned, that's at 78%, right?
Hot.
So it's very high.
Yeah.
And so the fact we're seeing this improvement, I mean, when you mentioned there, it's not uncommon to see BP and NYSE hang out above 60 for long periods of time.
Yeah.
And so just the fact that we've gotten to that, we haven't been able to break much north of that over the past few years, doesn't mean we can't break higher and stay there. Right.
Yeah, and with indicators, this is more a nuanced point, but we don't typically consider like resistance or support on indicators like we would for typical trend charts.
No, because there's not the same supply and demand relationship.
Yeah, right? Not the same supply and demand relationship, but I think there is a linkage to some market memory.
Yeah.
Where you're seeing, this type of participation, we've gotten this high on participation before, how the market behave.
Right. Yeah, it's not going to be a straight support and resistance point.
Right.
But to your point, the market is participating just as much now as we saw in February and as we saw in November of 2021. If we get north of that, we're new multi-year highs for participation.
Yeah.
That's a good thing.
Yeah.
That's at the end of the day, that's a good thing. You
Yeah.
can be overbought. I mean, talk about that from a kind of near-term perspective, but more participation from the breadth of improvement is a good thing as we head into 2024.
Yeah, absolutely. And it gives investors, advisors more options to go out and allocate money.
Yeah,
as well. Put really simply, but I like the way you said that.
Yeah, for sure. So I mean, there's I think 16,000 other things on that we could go through on here to talk about from a chart aggregation perspective, but I don't think we had that much time on the pod.
No, that was cool. So call it top 5 charts of the year +2. So the Magnificent 7 charts of the year.
Dorsey's Max 7.
Yeah, Dorsey's Max 7.
Cool. Awesome. Well, Will, thanks for hopping on here. Thanks everyone for tuning in throughout the year with us. I mean, I think we tried a few different kind of things with the podcast throughout the year. I know we've been able to do more stuff in person. At least I've appreciated that a lot.
It's a lot better than Zoom.
Oh yeah, a lot better. But if y'all have any people listening have any kind of suggestions, feedback, I mean, reach out to us. Let us know. Shoot us an email, twa@dorseywright.com.
If you want to see us do mystery charts again, just
I will not give another equally weighted sector ETF. Don't worry about that. Don't worry about that. But yeah, reach out to us. Let us know. I'm more than happy to hear from you. Appreciate everyone listening to us this year, and we'll be back to talk with you in 2024.